You know what the toughest part about the gym is? You said it. Showing up, walking in the front door. Because once you're there, you're going to work out,
Mhm.
right? But when it's cold and rainy out, you don't want to go. The toughest part is getting through that door. So the same thing. The toughest part is just picking up the phone, reaching out to us and saying, hey, I want to buy a house. How do I get there?
And then now you have this goal that pops up in your mind, and now you feel that internal pain of, wait, this is going to be some sacrifice. That's the point too, where I realized the personal finance really gets shaky, where it's like, okay, I know I dug myself in a hole, and to get myself out of this hole, it's going to take some points of sacrifice, or it's going to take me having to learn some things that I don't know at this time, and that's going to take me more time. So why even start?
You just don't show up and on game day, right, as the Eagles and say, hey, I'm ready to go in, coach. Where were you all week? Were you at practice? Did you game plan? Nope, but I'm ready to go in and win it. That's absurd, but that's what home buyers do. They wait till game day and go, hey, I'm ready to go in, coach. And they're like, you don't even know the playbook. Fannie and Freddie just up their conforming loan limit, which means before jumbo loan, you can borrow up to $806,500. So that right there tells me house prices are remaining strong. We have a shortage. We literally have a housing crisis in this country. We have more people than we do homes. House prices will not come down.
So we'll be back in 3, 2, 1. We gone. Welcome back, family, to another episode of the First Sip Podcast. I'm your host, Dekimbe Smith, and this week I'm back again with another guest, someone who's been here a couple times before, but maybe new to a few of you guys who are new to the channel. So I want to welcome you guys to Josh Giddings. Josh is my lending partner, my mortgage expert, my housing guru when it comes to, if there's somebody's brain I want to pick about what's going on, what he's seeing from clients, this is the guy I go to, because he's on the ground, he's doing the work, and he's doing this on a day-to-day basis. And I feel like he's somebody who can really share information with you guys. So with everything that's been going on recently, the affordability challenges that we talked about, the recent election, the Fed's decision to start cutting rates, there's a lot that's been going on since the last time I brought Josh on, and I wanted to bring him back now that we're going into the new year to see what he thought. So, Josh, welcome back.
Thanks for having me. Happy to be here.
No problem, no problem. And I'm gonna let the people know, because I'm pretty transparent about this. We just went through this about 2 minutes ago, trying to start this, and I didn't press record. So I thought it was recording, and it didn't. So now here we are. We can move past that. Josh, you were telling the people, you gotta show them the mug again. You
Well,
gotta
we
show
gotta,
them.
yeah, we gotta flex on them a little bit with the
Yep.
branding,
There
right?
we
It's
go.
all
There we
about the
go.
marketing and the brand.
Yep.
Boom, there you go.
Yep.
So I'm just sipping on some water, keeping it clean, brother.
Perfect, perfect. And I was telling before, I got my ginger tea right here, trying to keep the stomach nice and calm as we go through this. So let's get into it, Josh.
Yeah. So with the election,
Mhm.
there's a lot of speculation. We kind of know the devil we're dancing with, then not,
Mhm.
right? We've already seen 4 years, and like the guy or not, 4 years he was great for business. So here I want to keep it strictly like what you said. We don't like to get in politics and stuff like that. We want to just kind of stick to the facts and business. But I think we all know that Trump is good for business, but we got a lot of stuff going on. We got inflation. He's talking about tariffs, mass deportation. So a lot of that's all gonna be mixed up. We got brink of World War III in several different parts of the world. Syrian government was just toppled. So there's a lot of uncertainty. So just like any U.S. president before him, they all come into a mess, right?
Mm. Mhm.
Regardless of what political spectrum you're on, I think it's fair to say that every president over the past few elections has inherited a mess from somebody, right?
Absolutely.
So we got to clean it up. And the thing is, we're on a very slippery slope. Inflation, I believe we're not out of the woods. Tariffs that could further push up inflation and cost of goods. Mass deportations, that's going to cost money. Where's that money coming from, right? The good thing is I truly believe he'll be able to stop these wars and that hemorrhaging, but then that money's going to be spent elsewhere doing other things, right? He's talked about deregulation, which is normally good for business. Will be very good in our sector as well.
Mhm.
He was even talking about repealing Dodd-Frank. So that's going to put us back more to a free enterprise system with a little bit less government control. And I like that because I'm a big proponent of a free enterprise system. Adam Smith, the invisible hand, let the economy dictate itself. But we got the Federal Reserve, manipulating rates because, they have to keep those printing presses going and making sure that the US dollar is the preferred currency and
Yeah.
we don't go to something else, with bricks and everything else that we
Yeah.
have on the horizon. So, he's got a pretty big job cut out for him. But I do feel confident because the country is just one big business and he's a businessman. He doesn't care, obviously, if he's well liked or not. But if he gets down to business and gets done what we need to do, I'm good with it. At that point, a lot of people are talking in our sector about the Trump bump, right, for the economy, that it's going to bump up. But, he's got a lot of stuff that he's got to do. So we really don't know which way the mop is going to flop. But there's
Mm.
certain things that we do know, right? And I'm sure we're going to talk about that more in this segment. But at the end of the day, I don't focus on things that we can't control, right? We all casted our vote as good Americans, hopefully. Whether or not you voted for the gentleman, he is our president, right? So we got to rock with him for four
Got to
years.
deal
It
with
is
it.
what
Yep.
it is, right? So where's the play, right? Where's the play in all that we can be prosperous,
Hmm.
right? And rise. There's always a play. So we're going to talk more about that today, where that play is.
Absolutely. And that's a perfect segue because we were talking about getting down to business. And one of the things he really talked about, as far as the housing market was getting those rates back down. And I was just reading an article earlier today from Housing Wire where they were talking about basically the divergence between Fannie Mae and Zillow when it comes to their rate predictions going into their rate predictions and housing sales going into the new year, right? I don't know if you saw this, but basically Fannie Mae is saying don't expect too much of a change, right? As we go through the next year, pretty much expect a little bit of the same as what we had this year. And Zillow seems to be painting a much brighter picture, saying rates are going to go down, expect home prices not to go up too high. So it should be a good time for buyers. But they are saying that buyers who are looking right now probably have the most bargaining power because as you move into next year, if you're still waiting, it's going to only get more competitive. So what are your thoughts on that, right? What are your thoughts on where the rates are going to be as we go through the next year?
Right. I don't foresee a drastic drop in rates in 2025. I'm sorry, folks, because unfortunately, the old rule of thumb with inflation, the solution for higher rates is higher rates, right? We got to slow down the economy. We're not stopping spending money, nor will we. We're a consumer culture, right? We pay for convenience. So I think inflation's going to linger. But at the end of the day, we were spoiled. The exception
Mm.
became the norm. 2 and 3% rates of COVID. We had a global pandemic that almost shut down the world, right? That's the only reason why rates were that low. Rates sitting in the sixes right now for a house, that's cheap money. And people are saying, well, those rates are too high for me to buy a home. All right, well, let's stop. Let's talk about rates then. Most people that say that are carrying credit card balances. Even if you have an A plus credit rating, a 780 or higher, you're paying over 20% interest on your credit cards. And people are carrying credit card balances. We forget about that. You're going to faithfully pay, the minimum payment on your credit cards that you owe 20, 30, 40 grand on. And in the same breath, you're going to say, I'm not going to buy a house because I'm looking at a 6.5 or, 6.75 rate. So I think there's a major disconnect of the consumer, and literally, it's just lack of education and no disrespect. If you're not learning it at home, you're
Hmm.
not learning it at school, where are you learning it? All you're going to do is regurgitate what you hear from other people, and there's a lot of disinformation out there, right? And you got to be able to know what information is good and what's not. Like where you mentioned Fannie Mae and Zillow, I'm going to side with Fannie Mae because they're a government sponsored entity, right? They were created by the government to create the pool of money that we lend on for you to get your home, right? What's Zillow? Zillow is a lead generation website. They trick you into think that, hey, you can go on there and browse for homes, but that's why they have that little box on the corner for you to fill out your information and request more information about the house. They sell that to a real estate agent. They sell that to a mortgage company. So they're a lead generation platform. So of course they're going to be more bullish on rates going down because they got lead orders to fill. They got volume to fill, right? Of people buying areas that they're getting leads on. So you also got to consider the source and what they have to gain in providing said information, right? I always say you get the data, you got to be able to read in between the lines where that play is.
Yeah.
So I think interest rates will start seeing some easing as we go, but it's not going to be something drastic. I highly doubt we'll be in solidly into the fives by the end of the year. I think we might be scraping low sixes, top of the fives, maybe. But the Feds have to be cautious. They can't do it quickly. It's literally like skating on black ice.
Yeah.
You don't know where you're going to slip at because you don't see it, right? So
Hmm.
they have to be very cautious with rates. So for right now, I would say don't expect any major changes in rates.
Hmm. And you brought up the point about the disconnect right now that the average buyer has, and that takes me back to the conversation I was just having this week with somebody when they were telling me. I asked them, I said, what's one of the biggest challenges that you're having right now when it comes to buying a home, or even just wanting to take that first step and saying, okay, let me start looking again. And the first thing they said was, well, just look at the prices of these homes and look at the rates, right? What am I supposed to do? Just a few years ago, 4 years ago, when I probably should have bought, home prices were $200,000 cheaper, and rates were half of where they're at now. And I had two questions. I said, okay, well, do you know how your monthly payment has been adjusted since that time? Right? Because like we said, we see the big housing price and we think, oh, damn, that went up 50,000, 100,000. I can't possibly afford that now, but we don't know what that calculates to a monthly payment, right? It's much easier when you're renting an apartment because all you see is that monthly thing. You see 1,500, 1,800, 2 grand a month. It's okay. I can make that make sense. But when you're looking at home prices just go up and up and up, you're not seeing how that monthly payment can work for you. And you're not having the conversation. You're not even willing to have the conversation anymore because you're like, are you crazy? That was just, I can't possibly afford it. I didn't make any more money at my job, right? Nothing has really changed for me financially. So what would make me believe that I can go ahead and afford something like this? So that's the thing that I'm realizing now is really is a big challenge for people is how do we get them the education, right? How do we get them the points that actually matter so they're not just stuck on the news saying, "Oh, just give it some time because rates are going to slip. The Fed's coming back again this week. He's going to cut rates and everything's going to be right where you need it to be." We don't know that, right? We can't guarantee
Right.
that. And the way things are looking, that's most likely not going to be. So what are you saying right now to buyers? This is something that we talk about every couple of months, but what are you telling people right now to cut through the nonsense?
Real easy, exactly. There's a lot of misinformation, right? And numbers don't lie. I love data and I love numbers, right? We have a saying, right? The math's got a math, right? And I love that saying right now because homes are not unaffordable. Rates are not unaffordable. It's everything, right? We're seeing homeowners insurance go up, property taxes go up.
Hmm.
Most homes, right? Two brand new cars in the driveway, financed. Student loans for both partners, right? Financed. Credit card debt, financed. Kids in traveling soccer teams and baseball teams, right? Us as Americans, we have taken on more expenses because, frankly, we're trying to keep up with the Joneses, right? Everybody's concerned about what they're pushing, what their whip is, right? And if you're trying to run that race and worried about what everybody else is thinking, yes, housing's going to be unaffordable at that point. But a rate in the sixes is extremely affordable. I was just talking with a client who just went under contract about the difference of buying down a point, and the difference in the rate was a quarter of a percent, right? So when you see a quarter of a percent, you're thinking, wow, that's a big difference. It was $55 on a $341,000 mortgage amount, right? So, like a quarter of a percent sounds like a lot, but it's $55. And listen, if $55 is make or break in the deal, your budget's out of control, right? So, it's not so much about housing, it's everything that surrounds it, right? So, if you're living pretty much debt free, you're driving an 8-year old car that's already paid off, right? You're not drowning in student loans, you buckled down, you paid them off, you got your grants, maybe you got some forgiveness, whatever, right? Um, you're not carrying high interest rate credit card debt, right? Housing's still very affordable, right? It really is a good deal, and you want to ride that equity wave, right? So all my clients that bought 5 years ago, they're all sitting on over six figures in equity, every
Hmm.
one of them, regardless of what price point they bought it, right?
Hmm.
So it really boils down to your budget. What's a priority? You want to push two nice new cars, or do you want to own a house? Like, choose your heart, literally. And that's what it's got to be. And those are the tough conversations that I have with people on the daily. You know, I've had buyers that said, Josh, I can only afford 2,500 a month for a mortgage payment. And I'm like, okay, it's not going to get you too far in New Jersey, right?
Hmm.
But then I said, well, let's talk about it, because looking at your numbers, you can afford more, right? And I'm looking at their credit report. It was stuff that they weren't paying on their credit report. So this young couple, every day, stopped at Starbucks, both him and her. Both him and her ordered lunch out at work every day. And then half the time they were going out 3, 4 times a week for dinner, drinks, whatever, right? So just alone, and I even joked to them, I said, listen, get a Keurig, get yourself one of these, and bring your coffee to work. Brown bag it, meal prep it, right? Buy them both. Go to Aldi, get a huge pack of chicken for $1.99 a pound, boneless, skinless chicken breasts, right? Brown bag it. And after they looked at their budget, they ended up closing with me with a $4,300 a month payment by cutting the BS out of their budget. So the house wasn't affordable. They only could afford a $2,500 payment in their mind because of all their debt. So what I did is we restructured where they were spending their money and put it into something good, right? And it's like you know the gym, right? Do you want to fuel your body with processed food and candy? We want to get some organic stuff in there, some proteins, right? And good fats, right? Not those trans fats. So debt is good. Debt is necessary, just like fat is necessary, right? But we're talking eggs and steak, bringing that fat, not McDonald's French fries and Lay's potato chips that I love,
Mm. I like
right?
that. I like the
So
difference you made there.
so that's the thing is we got to start let going of those things that we love, right? In order to get something that's more valuable, which would be that home that appreciates in value than those two really nice cars we just bought that are depreciating sitting in our garage or our driveway, right?
Yeah.
So it's making the right decisions. And that's where it goes back where I said earlier, if you're not getting it at home, you're not getting it at school, where you're learning it, you got to come to guys like us who are going to speak the truth and have that hard conversation versus sugarcoating it and saying, hey, yeah, you know, rates are going to go down. Fill out this lead form.
Hmm. Yep. Exactly. Just trying to trap people at that point. Just being like, oh no, don't
Right.
worry,
They're
they're gonna
just,
keep going down. They're gonna keep going
yeah, they're
down. I'm
just trying
telling
to
you.
build a better mousetrap.
Yep.
Exactly.
Hmm. And man, what was I just gonna ask you there?
I know it was a lot. I'm sorry.
Going
I
back,
went on.
I just got it there. Going back to what we're you were talking about the overall financial picture, and it's more than housing. And
Hmm.
that's something that clicked for me a couple months ago as I was really like diving more into the YouTube space, trying to figure out what topics can we really talk about. Because at the end of the day, the interest rate is the interest rate. It's not jumping up and down every couple of months. So what's the real problem? Like, what am I seeing? And as I go through, right, and I'm reading and educating myself on and asking people, okay, what are you really dealing with? What are the challenges? What is it that we can really help you with? I'm starting to see more and more that it's a personal finance issue, right? There's
Correct.
not enough, like we were talking about before, there's not enough education, there's not enough coaching, there's not enough accountability as you go through month by month, as you're going through the years to help you really, I guess, stay focused on what your goal is, right? Whether your goal is to buy a home or to pay down your debt or whatever that is, I guess it becomes like a second or even a third thought, right? And you just get on autopilot. And like you said, you start going through life and you're buying lunch out, you're buying coffee out, you're buying the nice things because at that point, you're just trying to feel good, right? You're just trying to go through life and feel good, stay up, keep up with the Joneses, do what everybody else is doing. And then now you have this goal that pops up in your mind. And now you feel that internal pain of, wait, this is going to be some sacrifice, you know? And I was just talking to my last guest, Ryan, about this that's the point too where I realized the personal finance really gets shaky where it's like, okay, I know I dug myself in a hole, and to get myself out of this hole, it's going to take some points of sacrifice, or it's going to take me having to learn some things that I don't know at this time, and that's going to take me more time. So why even start, right? So for somebody who's at that point who really may not be ready to start the pre-approval process or have enough saved up for their down payment, what are some practical tools or tips that you would give to that person?
Well, number one, you said it, mindset, right? There's only a problem unless you realize there's a problem, right? And we have to call ourselves out on our own BS, right? And that's the thing is if you're ready to buy a home and you're saying, well, housing's unaffordable because of rates and prices, no, I disagree. Let's look at your personal budget, right? So that's a hard pill to swallow, right? So once you take a step back and realize it, right, then you're like, oh crap, like write it down, write out your budget. Where does your money go? And be truthful with yourselves, right? You're into diet and fitness, right? I catch everybody and even myself all the time with this. Oh, I eat good, I eat clean, right? And I just say for a week, log your meals into MyFitnessPal, right? And then as soon as you log it, you're like, oh shit, I forgot those 6 beers I had that night. Oh, I forgot about those Mickey D's I grabbed when I was hungover, right? There's all those extra calories why you're not losing weight, right? So I encourage everybody. Most people don't have a written down budget, right? And you're about ready to make the biggest purchase of your life and you're going into it blindly. You don't even know where your finances are at. You just have a preconceived notion that you snatched out of thin air that says max payment I can afford is 2,500. Well, that's not the case, right? And it's like, what do you do? Do we get rid of these expenses? Drive a less expensive car. You know what I mean?
Hmm.
Ford gets you to and from work the same way as a Mercedes, right?
Yep.
So, or public transportation, right? So it's what you're willing to sacrifice. But us as Americans, we don't want to give to get because we have that sense of entitlement. Me, 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 me. I deserve a house. I'm going to manifest a house. Okay, that's great. What are you doing to get there? Right? I feel like I should deserve to be 185 pounds, but what am I doing to get there?
Yep.
Not tightening up my diet, not hitting the gym like I'm supposed to, right? But if I want to get there, I know how to get there. It's a matter of whether or not you really want to do it. And right
Mhm.
now, I own my own shit, right? I don't want to do it. I'm happy, right?
Yeah.
So there's me talking about my personal life where I'm disciplined in my finances, where other people might be disciplined in their diet and a mess in their finances. So we all have our strengths and weaknesses, and we got to accept everybody where we're at. But also, we got to have those tough conversations where you're like, "Yeah, Josh, you got to tighten up that diet, brother." You know what I
Mhm.
mean? And I appreciate that. And the same thing is you don't need to be well received when somebody speaks to someone like me or you and be like, "Look, your money's going into the wrong places," and that's the key. Most people don't understand how money works, and you got to get that in education because there's the hustle culture out there in the internet that it's you're going to be a millionaire overnight with crypto. Yeah, it can, but you're trying to catch lightning in a bottle,
Mhm.
and you could just as easily lose all that money, right? So it's a grind. Everything you know doesn't anything good does not come easy, right?
Yeah.
It's a grind, right? And that's where you have to have the right mindset. You're either going to buy a house or you're not. If you're wishy-washy, it's not going to happen in this market. Just like the gym. If you're wishy-washy about it, show up a couple days a week. Yeah, 2 days is better than none, but you're not going to get the desired results.
There you
It's going
go.
to be a difficult process. So that's the best analogy that I can give to maybe hopefully wake up some of our audience and get you guys thinking like, all right, let me own my own BS and move forward because that's how you level up. There's so many times with clients, I say it's more than a mortgage. I'm coaching them about their businesses, getting their cash flow up. Like I'm doing a refinance right now for a client at 7.25%. A lot of people think, oh, that's utterly ridiculous. Well, that's where they qualified at the time. That's where they locked in on the cash out. We're paying off all this debt. When I'm done, and with him going over his budget, he's freeing up over $4,000 a month, right? And our conversation was this: just because you have it doesn't mean you need to spend it, right?
Mm.
It might be a nice flex to bang throw down a credit card, like, yo, I got this, right? Okay, that's cool, it's a flex. You look cool to people, but you're only hurting yourself in your bank account, right?
Yep.
So what we did is we restructured that debt, right? Because debt's like fat, good and bad. We took that bad debt, made it good debt, paid it off. Now we got a bigger spread. Now that's 4 grand that he's going to be reinvesting. Oh, and we got him a ton of cash as well. He's going to be buying 2 more investment properties with it, right? So it's not the cost, it's not the price, it's always the terms. What are the terms? What are you getting out of it? It's never the price. But we are all taught to shop price, and that's why America is failing.
Yep. And that's why we need to have more and more of these conversations.
These
And
tough
yep,
conversations, exactly.
yep. And that brings me to another conversation I was actually having with my sister because we were looking at some properties that we believe would be really good for a 203K loan. And that was something that I wanted to talk to you about because I still look at that as a huge area of opportunity and something that I don't think a lot of people are aware of. Even I mean, even just a basic FHA loan, but the 203K, right? Like being able to get some money for the rehab, wrap it into a loan, you know, and on the other side of that, I realize sometimes people hear that and say, "Whoa, I don't want to buy a home and then have to go start swinging a hammer, put laying down tile, doing all these things." So, can we talk about that specific product and maybe
Yeah.
any other products that you've seen that have been really good for the first time buyer this year and the past couple of years, since rates have been a little bit higher? Like, break that down for us.
Yeah. All right. So 203K is great because it's a renovation loan. And what it allows you to do is not only to finance the purchase price of the home, but also a renovation budget to rehab it if it's in dilapidated condition. Maybe it's outdated, got a kitchen and bathroom from the 1950s, right? And it's all in one loan, one time close. And there is no self contracting. So everything has to be done through a general contractor because it protects you and protects the lender, right? There's shows out there how to catch a contractor, right? So they have to be fully licensed, fully insured, fully vetted, and well funded, right? But the idea of it, and I'll give you the magic formula, is purchase price plus the renovation. You want it to equal or less than the ARV, the after repaired value. Now, FHA will allow you to go above that, but I usually don't recommend it unless it's an amazing opportunity because why would you go into a negative equity position? Because at that point, if you have to go above the equity, I would tell you in that same neighborhood, just buy a move in ready house and you're good to go. Right. So the idea of the 203K is look to build some sweat equity so you have that spread. And then that might help you get that extra bedroom that you're looking for or help get into that neighborhood or school district that you want to be for your kids, where you might not be able to purchase that move in ready home. You can strategically use the 203K renovation loan or the conventional one, which is the home style, and use that towards the purchase of your home and be a smart buyer. But it takes some aptitude for it because it's a lot of paperwork. It isn't for everyone, but if you want to start getting involved in investing in real estate and buying smart, absolutely, that's something that we can help you with. It's a very, very strong loan program. The other thing that we're helping buyers out with as well, getting into homes, is not really any type of magic loan program. It's strategic negotiations. It's never the price, it's the terms, right? So simply taking 10 grand off the sales price, right? We've seen a softening in the market in Philadelphia right now,
Mhm.
right? There's room to negotiate. Every deal, we're getting seller concessions, right? So if you're looking to buy, let's say, a $425,000 home and you want to bid 410, right? Because they're going to do a price cut of 15K. That's only going to lower your monthly payment a little bit because it's literally 15 grand less that you're financing over 30 years. Whoop-de-doo, it's a drop in the bucket. So what we would do is take that 15 grand and apply it to a rate buy down, right? I've got clients in Philadelphia that we closed in the low fives on a permanent rate buy down, not one of those 2-1 or 3-1 buy downs. That's a teaser rate. I'm buying it down permanently. So if rates don't drop, right, they're still protected because, again, nobody has that crystal ball. So, again, it's never the price, it's the terms, and who you work with matters, right? You've heard me say that before. You have to work with a competent agent. You have to work with a competent loan officer, and they both need to work as a team towards your housing goals. And that's the key. Every deal that I have that I'm working with a strong agent on the other side, my buyers are hitting grand slams. If there's a weaker agent or weaker loan officer, they're not doing as well. So you got to get somebody to know who can think and not afraid to negotiate instead of, hey, taking 15 grand off the sales price and taking the easy route out. We're going to negotiate that with the sellers and explain why it's a benefit to the buyer and why it makes more sense for them. So, you got to use the tools that are in your tool belt. So exactly what you said, you need to talk to a loan officer who's going to identify your needs. Same thing with a great realtor and come up with a strategy, whether it be a 203K or a USDA loan if you're going
Hmm.
rural, or doing a permanent rate buy down or temporary, depending on what you're looking to do. So I take a different approach. Most loan officers, as soon as you talk to them, what's your name, social, date of birth, how much money you make, how much
Hmm.
money you have saved, right? They make it about them.
Yeah.
Well, it's not about me. I'm always going to be here. It's about you who are looking to buy that home. My first 45-minute conversation with you, we're not doing an application. I'm going to say, Dekimbe, tell me about you. What are you looking to do? What are your goals? Where do you see yourself now, in the next 5 years, next 10 years? Because it's more than a mortgage. And that's how I'm helping people reorganize their finances, reorganizing their debt, cutting expenses, and then we're having successful deals.
Yeah.
And they're not afraid to buy in this market. But if you're just
Yeah.
doing real estate the traditional way, you're catching an L. You
Um,
really are.
I want to make sure I catch that point there because I think that is another really, really important thing that we talk about is just that initial outreach, that initial conversation, if you want to call it consultation, whatever people want to
Mm-hmm.
call it. Just it's a conversation, and I think not even I think I know because right we've done this. We've talked to hundreds and hundreds of people. You realize after a point that sometimes just even getting over the hurdle of pressing the let me book this call or let me send him an email or send him a DM to say, hey, are you willing to talk to me about this? Do you have enough time in your schedule? Am I wasting your time? And this is where sometimes I laugh with people. I'm like, yo, this is my entire job. I literally love to talk to you. Like, just reach out with the questions. As simple as it may be, as complex it may be, that is what our whole purpose is to be here to help and to serve you guys, right? People who are sitting there scratching their head being like, what what did he just say about after renovation value, purchase price, buy down, 2 1 3 1 teaser?
Right.
What are all these things? Guys, this is why we have these conversations. This is why I'm trying to make it so personable, so relatable, because I want people to see that these are real people on the other side, right? I remember how it was sitting in the bank and how stuffy it can be sometimes when you walk in there and everybody's in a suit and tie, right? Everybody's in a nice, like work outfit. And sometimes you feel as though like if you're not at a certain level, you won't get a certain level of attention. And I realize that same kind of thing happens in real estate. It holds a lot of people back who may not have the money saved up. It holds a lot of people back who may not know all the terms, right? It holds people back who may just have something else going on. And they say, let me take a few more months before I even reach out to this person because I'm not ready yet. And I realized, just like you were talking about fitness, that can be the biggest, your biggest obstacle, which is just pressing call or walking into the gym and saying, hey, can I talk to one of your trainers? I have some things I want to talk about, some things I want to work towards, and just watch how the yellow brick road just unfolds in front of you. It is literally that easy when you just start having the conversations, talking to people who just know so much more in a space that you don't know about, and just start picking their brain because they want to share the information. Obviously, yes, this is what Josh does for work. This is what I do for work. So we'll get compensated at the end. But that end comes much, much further down the line. Like we said, 6 months, a year, maybe 2 years, depending on who it is that you're talking to. So this isn't a short-term game, and we don't look at it that way. We look at this as really building and fostering those relationships. And that's something I wanted to make sure we honed in on, Josh, because you were just saying that. It's just let's just have the conversation. Just let's start talking about it. So if you can just give a few more points on that and just getting people more comfortable with just having a conversation with somebody like you.
Right. So I'm your financial priest or doctor, really. I have to keep everything in confidence as well, right? Because privacy, banking and everything else, right? So it is a safe space. And that's why I tell a lot of my clients, like, yo, you're in a safe space. Like, tell me everything. And, once people are comfortable with you, they'll tell you. And now I can better serve you, right? Instead of me guessing. If you're like, gosh, listen, my credit's banged up. All right, what happened? Talk to me about it. Everybody's been there. Everybody's gone through a tough time in life. I'm not going to judge you. And frankly, I don't care. You're coming to me wanting to buy a house. I'm going to help you. We'll get you into credit repair. We'll get you credit coached up. We'll show you how money works and how to effectively manage debt. So yeah, you got to have the conversation. And you said it, right? You know what the toughest part about the gym is? You said it. showing up, walking in the front door. Because once you're there, you're going to work out,
Mhm.
right? But when it's cold and rainy out, you don't want to go. The toughest part is getting through that door. So the same thing, the toughest part is just picking up the phone, reaching out to us and saying, hey, I want to buy a house. How do I get there? And we'll roadmap it. We'll literally roll out exactly what you said, the red carpet, the yellow brick road. This is how you do it. I tell my buyers very easily, you follow my plan, you follow my instructions, you'll get a house. You want to go rogue on me? It's going to be a very difficult process, but I've done this thousands of times. I've helped so many people. I've changed their lives for the better. And what more better job do you want in the world? Because the byproduct of, like you said, of us making our money, I don't get paid one red cent unless I help you get what you want. What a win-win, right? I get to help people and get paid for it. You get you what you want. Awesome, right? It's a great relationship. It's a symbiotic relationship. It's not parasitic, right? Because we're of an abundance mindset. We want to help you grow wealth through real estate with your family, create that legacy, right? Your home, it's your biggest asset, it's your biggest liability. You better do it right, for most Americans. So you're going to need to have an expert, somebody you can trust like myself or Dekimbe, to help walk you through that process. So that's the key, is have that conversation, but not only having that conversation, having it with the right people. Do your homework. Ask them, how long have you been in this business? How many families have you helped? Interview the person that you want to do business with. That's why, my social media is open. I don't have a business page and a personal page. It's all in one. What you see is what you get. Love me or hate me, I'm
Mhm.
good with either one because I know I'm doing the right thing, right? Nobody's ever going to say, Josh G, he's all right. Yep. They're going to be like, yo, I love that guy. Man, I can't stand him. And both are okay, because I put everything out there so you can see who you're working with and whether or not you want to work with me. Because what you see is what you get, and I'll go to war for you.
Yeah, I love that. I love that because that is like we've talked about this a whole bunch of times, right? That's a big part of working with people, is that no like trust factor. Understanding that, like, okay, yes, I know you. Do I like you? Do I trust you? And thankfully, through what we do here through video and social media, that's it becomes much easier to do over time, right? People start watching you for at a certain point. If you start adding up the amount of content you put out, it becomes hours and hours. That's something I am getting blown away by on YouTube, right? It's just they have the metric where it shows how many watch hours
Mm-hmm.
your viewers have accumulated over the past like 30 days, 90 days. And it is incredible to me to see how one, just like how this grows over time and to see like how people really do keep watching. And in my mind, I'm thinking, I'm like, well, I wonder how people start feeling about me. Like, are they trusting me more? Well, I would think so because they keep coming back, right? Are they really finding value in the information? I hope so, because I would hope they keep coming back and not just looking at it and be like,
Yeah.
man, let me find something to bash on, in this,
Yeah.
in this next video. So that is something I'm really like focused on is continuing to build those relationships, making sure that we can do the best by the viewers, right? The people who are coming here and watching. So and you were also talking too about that you have a YouTube channel as well. And
Mm-hmm.
so I wanted to say, like, if anybody, is checking this out, make sure you go over there, check out Josh's page. I'm gonna make sure we have that tag down in the bottom in the description so you can go ahead and subscribe to his channel and watch what he's putting out there. And also I'm gonna, make sure I tag the link so you can book a call directly with Josh, right? Because like we're saying, if this is something that you have in your mind 6 months out, a year out from now, go ahead and connect with him, right? Just like I tell you guys always, you can connect with me, right? My information is right there in the description. Let's talk about these things. Let's have the conversation early on and just see where you're at, right? We're here to have the conversation. We talk about normal stuff, right? If you don't want to, we could talk about the Eagles game right before we start talking about that other stuff,
Let's
right?
go. 10 wins in a
Right?
row.
I knew you would love that. So
You know
that's
it. Bird gang all day.
yeah, so like that's this. We're just we want to help people, so let's do what we can. Let us know how we can help you. And Josh, that's what I was gonna finish off with and saying before we get into the content rec of the week, I was gonna say, is there anything that I can do as an agent, as we go ahead and promote this video that I can do moving into the new year to help you with your business?
I appreciate it. That's an amazing question. And honestly, keep doing what you're doing because it's all about education and reaching people early enough in the process. Because number one, time is the most valuable thing in the world. Once it's spent, it's gone. So if you're thinking about buying a home, you need to link up with a professional right away to at least plan it out. Even if you say, I'm not going to buy for a year, That's a year more of savings. That's a year more of credit repair, whatever it is, to get yourself in the best position to get that best rate, get that best program, to make that home as affordable as possible for you, right? You just don't show up and on game day, right, as the Eagles and say, "Hey, I'm ready to go in, coach. Where were you all week? Were you at practice? Did you game plan?" Nope, but I'm ready to go in and win it. That's absurd, but that's what home buyers do. They wait till game day and go, "Hey, I'm ready to go in, coach." And they're like, "You don't even know the playbook." Right? So get in early and then get in, like we said, with the right people where you can get that education and then plan it out. That's the key. It is time is money. It is no doubt. It's the most valuable thing in the world. So it's never too early to start asking those questions. 100%.
Love it.
100%.
I love it. I love it. Now,
Yeah. So keep spreading that message because we need to get to our audience before they wait till game day to raise their hand or before they start playing for the wrong team.
mm,
Meaning that, they're stuck with the Jaguars or the
the
Panthers, right? A
Giants, yep.
losing, yeah, a
Yep.
losing organization with a losing culture, right? You don't want to work with a loser in this market, right? You don't want to work with a loser of a loan officer, a loser of an agent, because your transaction is going to be a rough one. So you only want to work with stars, people that are winners, that are getting stuff done in this market, right? Any idiot can write a mortgage at 2 or 3%, right? Takes a real professional to coach somebody through on what it looks like at a 6% plus rate and how it still makes sense to buy a home versus renting, right? So cream rises to the top, find your cream.
Mm, I love that. I love that. Now, moving into the final question for the people, Josh, one of the favorite
You got
parts
it.
of the episode, the content rec of the week. All right. Each week we either bring the people a book, a show, podcast, whatever it is you might have been tapping into lately. So, you have a content rec ready for the people?
I do, and it's a bad one.
I love it. Okay. So, that makes me feel better about mine. So, let me hear what you got.
I love TikTok.
Oh, man. Okay.
I
Okay.
do. So if I'm can't sleep at night, I will scroll and
Yeah.
scroll through TikTok. And I love doing research, right? Because I'll tell you one thing, TikTok's algorithm is amazing. So if I start
Crazy.
watching some videos on real estate, I can see what else is out there. And I get trapped because there's a lot of good information. There's just as much bad information, right?
Yep.
So if you want to buy a house, you can go on TikTok and get a lot of good information.
Hmm.
You can get a lot of bad information. But I'm just like amazed by it and frankly amazed by their algorithm because my whole TikTok is football and real
Yeah.
estate.
Yeah.
They have it dialed in. And even like me, I'm a dog lover. So I have my Yorkie. I think you might have seen him
Hmm.
on one
Yeah.
of the podcasts. He popped his head up. So I liked a thing with Yorkies and commented because it was about them spinning around and backing up. Mine literally will back up so I can pick him up. He's
Hmm.
hilarious. And I was like, oh my God, my Yorkie does that too. I just thought it was how he does it. Next thing you know, Yorkie is all throughout my feed. So I'm just amazed by the algorithm of
Mhm.
TikTok. So that's my content, Rec, is I am just utterly amazed at how well that algorithm dialed in and who knows how much longer they might or might not be around. I don't
I
think they're
was
gonna
just
go
about
anywhere.
I was just
Yeah.
about to say, man, you might have to really, start binging for the next couple of weeks. I think we got about a month left until that deadline comes. Well, we'll see. I know
Yep.
they're trying to push it back with the Supreme Court and once again now with Trump coming back in office too. I know he's got some close ties with the people over there and some of the big investors. So we'll see. I think TikTok got some more time left here in the US.
I do as well. It's pretty
Yeah.
amazing, but be
Mhm.
careful. With that being said, be careful what the information is out there
Yep.
because that's why I started watching it to see how much misinformation is out there.
Mhm.
And I would safely say there's more misinformation than good information, and a lot of half truths.
Oh yeah.
So, if the TikTok gets you excited to go out and buy a home, all right, cool. Time to take that offline and get personal, get face to face with a local professional to get you helped out 100%. You got to make sure you're linking up with the best people.
Yep. Just unplug at that point. But before you do unplug, my content rec of the week is a show on Peacock. And this one I just kind of stumbled on because I was looking for something new to watch. And I saw the one of the main characters is Kaylee Kuko. I think that's how you say her last name. And I was watching it, started reading the summary of it, And I was like, oh, okay, this is kind of interesting. So for one, people who know me know I love like murder mysteries, anything kind of thriller like that. So I was like, perfect, checks off all the boxes. And it's produced by Jason Bateman. So I'm like, all right, let me give this a chance here. The show is about this couple, and they're basically living a they're struggling right now in California, right? They can't afford their mortgage. The wife is Kaylee Kuko, she's a realtor, and the husband is a tennis coach. And they're just really trying to figure out an idea to make some money, right? Like we're all like everybody's at, right? What can we do to really just start thriving in life? And then they meet this guy, their plumber. He comes over to fix their sink one day, right? Cool guy, good looking guy, normal person, right? You would think. A couple days later, news story comes across this local girl has been murdered. And people are trying to figure out what's going on because this is like the third girl that's been murdered in the past month. And now everybody's saying, oh, there's a serial killer. The West Side Ripper is out here. So now, of course, the police are trying to search. Everybody's like, who could it be? Who could it be? Josh, who do you think the West Side Ripper ends up being?
Probably the husband or the wife.
Their plumber,
The plumber.
right? The good looking guy who comes over ends up being the killer. And you would think, okay, well, that's the end of the show, Dekimbe, right? So why would you just give it all away to us? No, wrong. Here's where I really started loving it. What does the wife say to do? Kaylee says, you know what we're going to do? We're not going to turn him into the police because we know he did it. We're going to convince him to start a podcast. So they start a true crime podcast with him, and it goes viral, crazy viral. And this is just in the first few episodes, right? So the show continues to unravel and unravel from there. But it is just so funny how this show develops because you would never think, as I just broke that down, like imagine I'm sitting here having a podcast with a serial killer, not turning him over to the cops, and nobody knows what's going on. They have no idea who's behind this thing, and things just continue to get crazier and crazier as the show progresses. So, guys, that's my recommendation for the week. The name of it is based on a true story, so check that out. That is it, based on a true story on Peacock.
Oh,
So
that's awesome. I'm gonna have to check that out. That sounds really good.
it really has me like on the edge of my seat, sitting there. I'm like, okay, what else could possibly happen now at this point? Right? It gets better and better. So check that out. Let me know what you guys think. But Josh, I appreciate you joining me again this time to break this information down for the people. We did once again have some technical difficulties in the beginning, like we always do. So that was the regular part of the schedule. But yeah, any final words before we go?
Yeah. So at the end of the day, fear is false evidence appearing real, right? So if you're fearful about the home buying process or investing in real estate, let's talk because there's something, that's holding you back because it's not a fearful process. Let's figure out what that is, get you comfortable and come up with a strategy. It's really that easy. And it's okay to be fearful of the unknown, but don't give yourself analysis paralysis where you don't take action. You know, after we do a consultation, if you say, you know what, it's just not right for me, that's okay. It's a-okay. But at least make an informed decision. So that's the biggest thing is get in front of a professional. Because one thing I do know, which we didn't talk about, and I'll finish with this too,
Mhm.
is house prices will remain strong. Fannie and Freddie just up their conforming loan limit, which means before jumbo loan, you can borrow up to $806,500. So that right there tells me house prices are remaining strong. We have a shortage. We literally have a housing crisis in this country. We have more people than we do homes. House prices will not come down. So ride that equity wave. Buy now, ride that equity wave. And rates eventually, when they drop down, you'll be able to refinance. And it's a solid strategy. Rates in the sixes are not horrible rates when you look at the grand scheme of things in finances. So, have that conversation, but let's be smart about it and intentional and not let preconceived notions or biases or stereotypes stop you from progressing. And we all know that those words are bad words in any type of your growth as a human being. So don't pull those words into your finances.
Yeah, I love that. I love that. And that's a perfect segue. So people can stay tuned for the next episode when we bring Josh back on, probably right around probably first quarter. And because, like you're saying, the Fed's got some things coming up. We're going to see what happens with home prices. I also don't believe we're going to see a big cut across the country. Maybe in certain areas you might continue to see some more drops, but let's see what happens, right? So people, thank you again for tuning in, right? We're trying to bring you good information that you can use on your day-to-day life. But until next time, stay tuned, stay curious, and as always, enjoy your first sip.